YouTube, how's it going? It is Inter-Equity Trading coming back to you guys with another brand new video. Today is going to be the long anticipated video on entries. The amount of comments we have gotten on just going over entries is crazy. So I thought it was time to make a highly detailed video just on entering the market. That's it. So again, if you guys are here to look at bias, direction, all that stuff, that's going to be for other videos. This video specifically is going to show you guys exactly how we enter the market on a daily basis. Please get those notepads out, listen carefully, and rewatch if you need to. If you guys enjoyed this video, please leave a like, a comment down below. Subscribe if you guys have not yet already. We are on the road to 20K. We're so close, man. We're so close. We got lots more content coming on the way. Talk to you guys soon. Enjoy the video. All right, guys, so let's hop right into this. I'm going to be going through diagrams first. And the reason why I like using diagrams is because this is the best way for people to develop the proper understanding, I should say. And then, of course, we're going to hop into some direct chart examples. But please understand, I use diagrams to explain things because obviously it's easy to draw it out. And that's how we can foundationally understand what I'm talking about by using diagrams. So I have two examples in front of me right here, okay? And these are the only ways I ever take an entry. This one on the left-hand side, this is going to be an example of taking an entry from the, and I'll quote, left. What do I mean by the left? All I mean is just price action to the left-hand side. And it's going to make more sense as I explain it, but let's go through this diagram in front of us right here. Very, very classic stuff here. If you guys aren't new to the channel, you should understand what this is by now, but this is easily a form of liquidity. This low respects this low from the left-hand side, and then we move bullish to the upside. Okay, simply leaving lows intact, liquidity to the downside, very simple. After printing this high, let's just say for example purposes, we took something from the left-hand side or we tapped into some sort of key level, which we're now going bearish off of. Now, what I need you to identify here is what's gone on at the high. Price sold off, printed this low, and then we got a bullish move up, taking out previous highs. Why is that important? This creates what's called a liquidity block. This isn't any secret stuff here, guys. I just simply titled it a liquidity block for me to just easily explain it. That's all it is. But a liquidity block is a high that has swept a previous high. So you can see this high has taken out this high from the left-hand side. After that, sell off to the downside. Again, if you guys aren't new to the channel, you should easily understand this by now. But again, we sweep out that previous high and then we move to the downside. Price action simply takes out a low, printing a new low, and then we go bullish back up, respecting previous highs, okay, and then selling off again to the downside, leaving highs intact. We have our target in mind. We want to be looking for shorts into these lows. However, we need to see sellers trapped in order to take the entry. Now we can very, very easily identify that price has now left seller liquidity here. Now we want to see price back up to the upside and trade above these highs. Now, this is where this video is very important. We can now take entries above this high because we are entering from the left. Okay, what do I mean from the left? Now that liquidity is taken above these highs, we are trading within this liquidity block, okay, this whole area here, which means price can technically just pierce this high ever so slightly, just like this, and then we can see that sell off to the downside. So that's why if you guys are following me on socials or just Inter-Equity as a whole, you can see that all we do is take the entry as soon as the high is taken. Okay, we don't need price all the way up here. We want to take the entry as soon as the liquidity is taken. So as soon as this high is stabbed, you are pressing sell. Just like this, stop loss goes above the high from the left and target down at the lows, just like this. Now, sometimes, yes, price can come a little bit deeper. And with the benefit of hindsight, sure, you could have said, oh, I should have waited to get in here. But there's just no longevity in trading like this. The important factor in this example, what I need you guys to understand is we're able to enter as soon as the liquidity is taken out because we are trading within this liquidity block. If there was no liquidity block, we can't take the entry here. And that's when I'm going to get to this right example. Okay, but for this left example, taking an entry from the left is this right here. As soon as this high gets taken, you can see how we market execute like this. Price will sell off back to the downside. All right, and this is going to be our target. So we simply take the sell, Once sellers are trapped, we have a liquidity block above. Perfect. So we're able to press sell. Essentially, and this is an easy way to think about it as well, guys. If we're selling, the high of the liquidity block provides us a level for our stop loss to be placed. That's what the liquidity block does for us. It gives us a level for our stop loss to be placed. Okay, that's very simple, as easy as that. Okay, so again, entry, stop loss above the high from the left, target down at the lows. That is the entry from the left. Now, we are going to be looking at an example where we can't take the entry from the left. Why? We don't have a liquidity block here. So in this example, I'm just going to drag this so we have a little bit further of a target. Target is down at this low. Why are we looking for sells? In this example, we can just say that we've had a BOS to the upside, so retail is interested in buying at the low. Okay, so this is gonna be an area retail is buying at. We wanna see sellers trapped before taking the sell. Okay, very simple. Look what price does here. We take out previous lows, printing a new low, and then price comes back up to the highs, respects the highs once more right here, and sells off again, leaving highs intact. Keep your eye on the highs. We wanna be selling above the highs. However, look at this price action we have here, then look at the price action we have here in the previous example. Completely different. We have a liquidity block here, we do not here. So this is gonna be in time to look for a confirmation entry. So it's very simple. Two types of entries, entry from the left or confirmation entry. Price comes above this high. Now, what are we doing? We can't just take the sell unless you somehow covered this whole high, but that's just not a good example here. What we need to be focusing on in this specific example is making sure we have a confirmation entry built for us. Now, just like we talked about over here, what do we need to take an entry? We need a liquidity block. We do not have one on our screen right now. So what we need to do is wait for a liquidity block to be built. Now, look what happens here. Price gets a reaction to the downside. We spike up once more. Now we've traded above this high, sweeping this high out. We haven't had that reaction yet, so we don't know if this is a liquidity block yet. Then the market will react. Maybe we have a little pullback here, then a continuation, and then maybe another pullback and a continuation. Now, I hope it's starting to make sense to you guys. We have another liquidity block just built for us right here. Look at the similarities. You see? Liquidity block printed. So now we have an area that we can take an entry off of. Okay, but remember, we're looking to sell. What do we need to see happen? We need to see sellers trapped. So look at this. Price is engineered liquidity. Now you simply wait for price to stab the high. We take the entry. You see how it's literally the exact same? That's why this model is so powerful, guys. This is why this system is so powerful. It is incredibly repeatable. Entry taken, stop loss placement above the high, always, and target back down to the downside. Just like that. Typically what will happen, we get tagged in and then boom, and then our targets hit down at the low. Okay, but again, I want you guys to understand that this here is the confirmation entry. This is an entry from the left-hand side. So you did not have to wait for price to come into here for you to wait for something like this to occur again, right? If you wanted to wait for a confirmation in this high, you'd wait for something like this, right? Liquidity block built, engineered liquidity, sell taken right here. I hope this is making sense to you guys now. We're going to hop into some charts and we're going to look at some actual examples now. Okay, guys, perfect. So in this example, we're going to be looking at just Aussie dollar here on the 5-minute chart. Quick example, quick and easy one. We can see that price took out this high, inducing buyers into the market. So we can just write a BOS here. So look how I've marked out this red area down at the lows, right? An area that buyers want to be buying that could engineer liquidity below this low. Look how we react off it once and twice. Okay, leaving seller liquidity at the highs. I'm going to get rid of this blue box for a moment here just to clear this up. But what do I mean by seller liquidity at the highs? Take a look at this. Price takes out lows once, twice, and then we get a pullback to the high right here, and we respect this high. So there's that buildup. We want to see sellers induced, right? What I mean by that, sellers enter here, and we push off to the downside again, building liquidity above this high. Now, an easy way to mark this out in a way where you know exactly where to enter is we've identified liquidity being above this high, right? So grab a box. I like using a blue one. Mark out that exact high. Mark out the high of the liquidity block. Drag it over. Anywhere within this blue box, you press sell. Okay, and again, sometimes price will come all the way to the extreme, and that's fine. Understand that as long as the liquidity block holds, aka this whole area, this whole high here, it's valid. Okay, so again, we've marked out that liquidity point. blue box right above this high covering the liquidity block. Entry would be just like this. We take this sell as soon as we tap in, like that. Stop loss above the high and target down at the lows just like this. Okay, so again, making sure you take that entry as soon as the liquidity is taken, and we are targeting, I'm gonna drag this over. This is gonna be our target back down at the lows, which is essentially engineered liquidity, right? Buyers induced here and in here, and then we move to the upside, which means we have engineered liquidity to the downside. This is going to be what we call an entry from the left. We take the entry when the liquidity is taken, and you have an LB to the left, a liquidity block to the left. Now we're going to go into our confirmation based entry. Okay guys, perfect. So in this example here, this would be gold chart. And again, this is going to be an example of a confirmation entry. We have induced buyers. Okay, follow along. Previous high, new high, inducing buyers when we take out that high. Okay, leaving liquidity to the downside. I already have it marked out for you guys, so it's very easy, right? Leaving liquidity here. Price sells off to the downside. Perfect. Look how we leave some internal liquidity there, an added confluence for us to go long. And then we take the lows up from the left. Now, I don't see anything too clean to the left. Maybe if we came down here to the low, down in here, but we did not, unfortunately. We would have to look for what's called a confirmation entry, which is now being built in this price action right in front of us. Remember, we need a liquidity block. What has price done here for us? Boom, liquidity block built. Now, again, what do we need to see? Engineered liquidity. We'll hop into the 1 minute time frame. I already have some of it marked out to make this as easy as possible for you guys. Look at this. High, low, new high. And look, we print another low and then a new high, leaving liquidity. I'm going to remove this blue box again, just to make this easy for you guys. Look, anywhere below this low would be an entry because we have a liquidity block to the left-hand side. Now, this is our confirmation entry. Sometimes we're able to press buy here, okay, when the liquidity is taken. And of course, we cover a certain low to the left-hand side. That would be known as the previous example, a entry from the left. If we can't enter in this area with something from the left-hand side, then we need to wait for something to get built for us, aka a confirmation entry, and we have one right in front of us. Price engineers liquidity. Perfect. We see early buyers enter the market. As soon as this low is taken out, you press buy. So what I like to do sometimes, again, I simply just mark out that last low with a blue box, grab the liquidity block low, and I drag it over to the right. Anywhere within this blue box is a buy entry. So look, we would have got tagged in right here. Stop loss below the low. And target would be the external high where sellers would be trapped. Okay, and again, you have an added confluence of some lower time frame internal liquidity here. And then of course, the last target would be this external point. And if I zoom out, you can see we've hit it just there. All right, but again, I need you guys to understand, please rewatch this video if you need to, but this is going to be your confirmation. This is going to be your entry from the left. All right, guys, I hope you enjoyed today's video. Yes, I took my time and made sure I structured this video in a way where it was easy as possible to understand. I hope you enjoyed. Again, if you did, please leave a like, a comment down below of what you guys want to see next from us possibly. Without further ado, we'll see you guys soon. All the best. Take care.